The dreams for $3,000 gold have all but shattered, but that does not mean that we won't see gold continue to move in an upward direction. But it also means we should change our calculus in terms of where the price could go, according to some analysts out there. And I'm going to discuss what they are thinking and also give you my point of view as well as where gold will head in the next few months and into next year as we explore. Yes, gold's price has been on fire this year. It has reached multiple all-time highs over and over again in nominal dollars, and many people have felt for quite a while that we could see $3,000 gold very, very quickly. But things have changed since the election of Donald Trump, and now everything is changed in terms of how people view the economy, and geopolitics, and the like. There's been a lot of moving parts going on and that has changed people's points of view, good and bad towards gold, by the way. In fact, right now, gold is bouncing back a little bit from a pretty big dip that we saw in the previous day. I'm going to be referencing an article here from Kitco, but the thing is the one we need to consider is that gold's prices will be volatile, and so will silver's, and that's why it's a good time to think about when the prices do fall, to be on the lookout for the best deals you can find. Summit Metals has been very competitive with their pricing structure for gold and silver, so I hope you will consider checking out SummitMetals.com. They have some really good deals and a lot of different promotions going on as we head into Thanksgiving and for Black Friday. And they have a slew of codes of savings that you can take advantage of too. Those codes I'm going to post down in the description below for a couple of different items and products there at SummitMetals.com. But there's an article here from Kitco that asks this question: if there really is possible that we shouldn't consider $3,000 gold to happen anytime soon. And by the way, I'm going to answer that question right now. For me, I think we're not going to get there, even in the next year, unless save for something really extraordinary. I don't think we're going to see it next year, but who knows? This is a little precursor to what my viewpoints and what my prediction is going to be for gold next year, but we could come very close. The gold price chart is starting to resemble roller coasters right now, and we're seeing some volatility, certainly in the gold market, something we've not seen except for in the silver market, but the sharp rises followed by corrections and vice versa. And it's not about Senator Loomis's call to sell part of the Fed's gold reserves and to buy Bitcoin for U.S. reserves. It's a story I covered fairly recently here, and more than likely, probably we're not going to sell our gold, especially understanding now that we have an incoming Treasury Secretary who, believe it or not, is very pro-gold. More on that in a future video. Of course, geopolitics is the main reason for the rise in volatility. We saw a rise over the last week that was triggered by the Biden administration's approval for Ukraine to use long-range weapons against Russia. The fear that the situation could spiral into something much worse, like a third world war or the use of nuclear weapons, has clearly fueled increased demand for safe haven assets like gold. No question about that. That fear is not gone, it's not subsided until such a time when that war can be negotiated to a peaceful end. There are mixed reports about what is going on in Ukraine right now and in Russia, the Kursk region, because there has been an incursion into the Kursk regions by Ukrainian forces. But notwithstanding, there's also reports that Russia is making advances to the west in eastern Ukraine, taking more territory. But it's back and forth, and for all intents and purposes, aside from that, it's basically stalemate, especially when considering the mounting body count on both sides. And that is something that does not seem to have an end, at least right now, in sight. Whereas the other thing, reports suggested that Israel and Lebanon may have reached a deal is indeed true. In fact, there will be a cessation of all military activities starting at 4 a.m. tomorrow, or the day after recording this video. And that certainly hedge funds seem to have reduced their long positions in gold, which pushed prices lower, because at least from that front, that side is subsiding a bit. The other thing is too that Hamas has all been destroyed, and there's pockets of resistance, obviously, and there's still the hostage situation there, but that very well is winding down too, and there's only so many Hamas leaders and officials and soldiers left to fight, and they've done a lot of damage to Hamas over there. As reports suggested there that is happening, and the U.S. dollar strength, which stems from geopolitical tensions and Trump's plans to introduce a wave of tariffs and start new trade wars, has also added fuel to the fire, as usual for commodities. No question about that. But the one thing is for sure, these tariffs, depending on how targeted they are and how they are implemented, well, they will indeed cause prices to go up. But as you know, as I've talked about multiple times, rising prices does not equate to inflation. They're two separate animals. And so that's when more people that understand that and realize that, the better off we will be in understanding our economic situation. By the way, a concept that really Trump really didn't know much about, because he likened inflation and tied it to high gas costs, high gas prices. Well, there's more than just a high gas prices than where we're getting our oil, by the way, too. What can contribute to high gas prices is inflation. But nonetheless, what's in store now for gold? It's hard to believe that the dollar strengthening will continue much longer. It's been at record highs, as it will negatively impact U.S. exports, and it could hurt countries with a dollar-denominated debt. As for the geopolitical factor, even if Israel agrees, which they have, pressure to a ceasefire under pressure from the U.S. and an international community, it's too early to talk about peace in the Middle East. It would be a temporary truce, not a peace treaty. Secondly, there are still many risks in the region, including Iran, which has promised to attack Israel again, which will have a response. But so far, they've not done it. That's the other thing too. If these hostilities cease for now, they very well may not attack. I'm thinking. I think this is going to have a pretty big impact, even though, as of the recording of this video, gold and silver prices are up. And I think that just might be consolidation from the prior day's move. And so there's a lot of things we have to consider here. And getting back to the conflict between Russia and Ukraine, which is really a war, and tensions will probably rise again. But when you think about what's happening there, how tense can it get? How much more can it affect the price in an upward direction? I don't know. My guess is probably that unless they actually drop a tactical nuke, or some other country officially gets in, like let's say French troops are officially going to be sent to the front lines, then and only then, only a big move like that would have an effect. North Korean troops entering in on the Russian side has not had that big of an impact. Now, so we'll see. And in this sense, we're only witnessing a correction and not a complete reversal of the trend. The outlook for precious metals could remain positive in the long term. Remember, Trump promised to negotiate an end to the war. And he said he could do that within 24 hours. But I think he made the calls within 24 hours. And likely, probably, what's going on now is only because they only have a few months left, a few months left before essentially Trump takes office, which means hostilities will increase and maybe intensify up until then, which means that there's only so much that can happen before it actually does widen the scale of the conflict between Russia and Ukraine. So UBS, like Goldman Sachs, expects gold to rise only to $2,900 an ounce by the end of next year as central banks expand their holdings and the Fed continues to cut rates unless inflation picks up. So they're banking on more central banks holding onto gold. And they're also banking on the Federal Reserve to cut rates, which is good for gold. And still, they are not now thinking that gold is going to go up to $2,900 or not going to go past $2,900 an ounce. It's crucial to monitor the consumer price index and producer price index data and the overall economic performance, since the FOMC will base its December meeting decision on this information. but likely the Fed is going to cut another quarter point on December the 18th when they meet. And even that, I don't think will be enough to send gold soaring into I don't think it's going to get it back to $2,800, much less $3,000 by the end of this year. And they're not thinking it's going to happen by the end of next year. I'm not thinking it's going to happen by the end of next year either. However, I think it's very likely, given increased tensions and the like, and other factors that could play a role, we could still see very close to $2,900, if not $2,900 by next year. But I think essentially all these forecasts for $3,000 gold have been canceled now. And I tend to agree with those analysts. Yes, I'm kind of go along with the mainstream on this as far as some of the analysts as far as where gold is going to go. Because I think in a sense gold has kind of reached to some degree some sort of pinnacle, as it did very close to $2,800 an ounce. In other words, we could still see all-time highs again in nominal dollars. But I think it's still a ways off before we see it hit to $3,000 an ounce. And by the way, adjusted for inflation, gold would need to get to $3,200 to $3,300 an ounce to reach an all-time high in real dollars, adjusted for inflation. So there you have it. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate this video. That means press the thumbs up button right down there. Share it on Twitter or X and other social media platforms, even MySpace. Let me know if you share this video on MySpace. That would be great. And subscribe.